every day you see an announcement that Strategy bought this many coins, Metaplanet bought this many coins, this new company is buying, and the price is going sideways and down. So it makes zero sense, you know, and I don't really have an answer about why. I think it's probably a number of things, but definitely I think everyone has this sense in their head that something is off. And there's no way to know for certain until, something blows up and it's all over the news. But definitely I would say it puts the suddenly, very close to now, and it could trigger at any time. And that's kind of like the Omega thesis. And I think that the current situation of Bitcoin price is definitely, on the verge of Omega.
The more you study Bitcoin's price, the less sense it seems to make. Corporate accumulation is surging, MicroStrategy keeps stacking, Metaplanet has joined in, and new firms are buying Bitcoin every week. Yet the market barely moves. Prices drift sideways or even slip lower. To casual observers, it looks broken. To seasoned ones, it feels rigged. There's a growing disconnect between on-chain activity and market performance, and that gap is raising serious questions. Enter Samson Mow, who isn't afraid to confront the discomfort. He doesn't claim to know everything, but he's willing to call out the cracks in the system, from phantom bitcoins sold by shady exchanges, to overleveraged ETFs distorting supply, to potential fraud hiding in plain sight. The math doesn't align with the market narrative, and if everyone can feel that something's off, it suggests a breaking point could be closer than most expect. That's the heart of Mow's Omega thesis, the belief that a market-wide reckoning is inevitable, and it won't arrive with a warning. This isn't fear-mongering, it's a reality check. Systems built on synthetic manipulation and paper games can only defy gravity for so long. When reality hits, it won't whisper, it'll crash through the door. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
Spam is non-native data to the Bitcoin network. So you can say that you don't know what spam is, but what is a Bitcoin transaction? If you download the Bitcoin client and you get some Bitcoin, like someone sends you Bitcoin and you send someone else Bitcoin, that is, that's the main use case of the network, sending and receiving Bitcoin. And that is not sending pictures and other things. Like there is arbitrary data, and that's usually stored in op return, like 83 bytes of data. And it's been like that for a very long time because you can, store a hash of something or a double hash. Open Timestamps uses it. Various other protocols might embed a little bit of data, but that's been generally deemed safe and acceptable with general consensus/agreement. Consensus seems to be a trigger word these days. Like people like to argue, oh, that's not a consensus rule. But we're not saying it in that meaning. We're meaning like, do people agree? And people agree. Op return at 83 bytes is generally accepted as okay. But when you start moving towards larger blobs of data, I think that's a slippery slope. And you'll come to see like most of this discussion is really about slippery slopes. There are slippery slopes everywhere. I think even in ordinals, inscriptions, things like that are also spam because they're not sending Bitcoin. They're using Bitcoin to send something else. I mean, you can go back and look at color coins, but same thing. But I think as long as you're not harming the network, and I think we can generally agree that bloating the UTXO set is harming the network, then it's okay. So if you're timestamping, you're putting very little data, you're paying fees, that's good. But you can pay fees and bloat the UTXO set or embed data and images and whatnot. And I think that is spam. But it really comes down to a blend of harm and what exactly is your intent. You can remove the limit And I think the rationale there is that this is something that can be done already. Therefore, the filters don't work. And if you remove the filter, then I believe you're encouraging more of it, especially because there has typically historically been resistance to this type of behavior. And, when Luke was more influential in core and less,
Ostracized.
pushed off to the side, ostracized, then I think we would have seen a different scenario play out. But yeah, I would say that stuff is spam, and all of the other protocols that are kind of leveraging Bitcoin in an affinity scam type of way, like, this is on Bitcoin. No, it's not on Bitcoin. It's a separate thing that points to Bitcoin and points to, arbitrary data stuck on Bitcoin. So, I mean, filters do work. I mean, they've worked for a long time. It's just recently what we see is people are bypassing the filters, right? You have a Libra relay, and that's it's kind of meant to show the nuts guys your filters don't work, but it's not necessarily a good thing because you're kind of showing that all of these standardness features are bypassable, and they are all there for a reason, to maintain Bitcoin as money, not as arbitrary data, and to also keep the Bitcoin network usable for the purpose of money, like transacting between you and I. So it's kind of bad in a way, and you can view it as an attack. I think the core side likes to say private mempools are bad and harmful, but bypassing the filters is also a bad thing because they are there for a reason. I'll give you another example. Like, you can't say filters don't work. There's another filter called dust relay fee, which was implemented to prevent spam on a network, like from Satoshi Dice back in the day. That is still there, and that is what's holding back the network from being inundated by spam. But, someone could, for shits and giggles, start relaying spam and then convince some miner somewhere to start mining the spam. And then guess what? The filter doesn't work because you weakened it. So it's not like something to be proud of that, yeah, you can bypass the filter. It's more of a politeness. It's more of a standard. It's more of a way to operate that's not in consensus, at least not yet. And it should be respected in general because it is better for the network. Another example I like to give is traffic. If you go to the third world, you see congestion in the intersections because everyone's trying to get to where they're going a bit faster. They're cutting people off, running lights, running signs. And in Western countries, generally that's not the case because people generally follow the rules. But that doesn't mean you can't run a red light. Mechanically, you can run a red light. You can cut someone off. But if everyone does that, then guess what? It degenerates into this messy blob of traffic. So I guess that's my point. Like, there was another example. I think Steven Rivera posted it. It was Macrello saying, Peter Todd and this other guy are smart cows that show the other cows how to bypass the filters. Like you can open the gate. So, it's always been the case. You could always bypass these things, right? But I don't think we would agree that we should bypass dust relay fee and start seeing a massive amount of dust clog up the network. But here we are. Well, fees are a filter, but it's not the only filter, right? So you can have perverse external incentives, whereby you have some external protocol to Bitcoin that can pay for the fees and can spam the network, right? If you look at ordinals, that's one. It's kind of like an ICO, but with pictures. They're selling these PFPs or whatever, wizard images and cat images, and then they have a war chest and they don't care. They can print more stuff. Or more adversarially, you could have a company that launches an ICO, raises a few $1 billion, and fees are already low, and they can create a new protocol called proof of empty blocks. I talked about this on the pod with Cedric, and now they're going to pay miners to mine empty blocks because that is how they designed their mechanism to generate coins on their chain, right? So there's a lot of things that you have to kind of think that it is an attack and mitigate it. You can say fees are the filter, but it's not always a filter. And the other angle to this is we are weakening the fees as a filter mechanism because we increased the block size during the block size war. So you have less fee pressure. And in 29.1, you lowered the minimum fees to 0.1 sats per VByte at a time in which fees are already historically low and declining for miners. And you can argue, well, the miners could set it higher, but that's not necessarily how it always goes. A lot of pools will run defaults, and some of them may be more interested in short-term economics and getting, $100 more in fees versus the long-term economic outlook. And, that can be self-sabotaging because now you just lowered fees by a factor of 10-ish. And it's going to be hard to build that up even back to 1 sat per VByte, much less higher, at a time where you have more L2 traffic than ever before with Lightning, Liquid, and you have ETFs that take even more transactions off chain. So there's a lot of nuance and dimensionality to all of this.
Bitcoin wasn't designed to host JPEGs or run flashy side projects. It was built as sound money. Lately, however, spammy activity is creeping in. Bloated inscriptions, protocols exploiting low fees, and filters being bypassed. It's not that the safeguards are broken. It's that respect for Bitcoin's core purpose is waning. What's passing for innovation is often just distraction, and if miners prioritize short-term gains over long-term integrity, they could undermine the very foundation of the network. Bitcoin's future is being pulled in two directions: amplify or evolve. On one hand, spam, protocol abuse, and bypassed filters raise concerns. On the other, developers push upgrades like covenants without clear demand or real-world testing. Bitcoin isn't just code, it's critical infrastructure. Reckless changes risk eroding the security that makes it reliable. Despite these tensions, adoption continues. Nation-states are exploring it, corporate treasuries are accumulating, and the bull run may feel overdue but far from over. Let's dive into more clips from his interview.
Well, filters only work if we generally agree that these should be the filters, right? If you are bypassed, and Libra Relay can bypass that, and some miners mining it, others might figure out, okay, well, why don't we get that too? And maybe they didn't do the economic analysis and see, well, it's only like $100, or even if I'm mining ordinals, it's like marginally nothing. But overall, these kind of behaviors are detrimental to the network as a whole. So it's kind of like bringing down and making it harder for miners, if there was a downturn in price, that they would be able to survive, right? Because they're getting less money. But it's also when you normalize it through the Bitcoin core client, that's even worse, because you have some people showing that, okay, this can be done. And Core has said, we generally try to align to network usage and, what people are actually doing. So you show this can happen, and then Core drops the limit. And you could say the same for Dust, right? Like, start mining Dust and start relaying Dust, and then Core will adjust it in 3.0.1 and remove that limit, because I've said that in the past, like all of these things are guardrails, and we should be removing these guardrails.
So, but do you think that NOTS is a safe node implementation to be running, or do you think the risk of the single maintainer is too high?
Well, I don't necessarily think the single maintainer is an issue. The issue is more that there's a large difference in code, like 25,000 some odd lines of code between Core and NOTS. And this is because Luke is cherry picking things to merge. It's not a rebase. I think you might have some things that could be merged for security reasons that may have been missed. I don't know. I haven't looked at it closely enough, but for me, that would be a reason why I would choose not to use NOTS. But I don't think it's because it's just one maintainer, because, Luke is a very skilled engineer. He knows the code base in and out. He was the one that figured out that SegWit could be done as a soft fork when nobody else in all of Bitcoin Core thought it could be done. They all thought it was a hard fork. So he knows the ins and outs of the code base like the back of his hand. And I think, I could trust his judgment on, developing Bitcoin software, because he's been here since the earliest days. Well, it depends. I think if you have one client that's rebasing off the latest Core version, then it's far less risky than just cherry picking changes and merging, which is the NOTS method. But I don't necessarily think that's an issue. Like, what we need is more testing than development. So the question is, Danny, why do we want so many developers developing so many features? There's a clip of Sailor on the old What Bitcoin Did pod that's going viral right now, where Sailor is saying, we don't want to change things. Like, you don't want more and more complexity. You don't want more rules. You generally want to be very conservative for Bitcoin because, it was a $1.3 trillion asset. Now it's now it's 2.0 something trillion dollars, right? So it's getting more and more valuable. I think we need to become more and more conservative. Like, do we even want multiple releases of Bitcoin Core a year, or do we want one a year or one every 2 years? I don't know, but I'm okay with like a 1 to 2 year release cycle cadence, barring any urgent bug fixes for critical vulnerabilities, because there don't need to be that many features added to Bitcoin at this time.
How much ossification do you want to see? Like, in terms of things like covenants and these more out there potential upgrades to Bitcoin, are you just like wiping the board? You don't want to see that come to Bitcoin?
I'm open to it, but not right now. I mean, there's no need for it. Like, people pushing for covenants, you can do that on Liquid right now. Yes, you don't like Liquid, probably you want it on the main chain, but prove out the use case and get some adoption. Like, have people using it for some wallet somewhere for some reason. But you can't just say we need this. And I don't think we're at a stage in Bitcoin's life cycle where that should be the case, where someone comes to the table and says, I need something and let's change something. Like, that's just completely unreasonable for an asset that is the size of Bitcoin. And, I agree that we do need bug fixes. Like, there are things that we can fix, but like, that bug is in 2038. We have time, right? Where there's no urgency. We can spend more time analyzing the current state of Bitcoin, looking for more bugs, fixing issues, and fixing these longer term bugs that, can wait for a decade. Well, I don't like the word custodian for anything like eCash, because custodian is a legal term. It's like you have a legal responsibility to someone because you're taking care of something for them. It is a definition. I would call things like Liquid, eCash, Fediments, and the like, cypherpunk asset pools or caps. And you're just pooling and unpooling together. And there are different security models around these things, but it's not a custodian. So you want Liquid because you want the benefits of the Liquid chain. You can't expect to have your Bitcoin and have the Liquid BTC at the same time, right? It doesn't work that way. So you have to make a trade-off and take one over the other. But you can always swap back, and there's utility there. But my point is, if you wanted to build something with covenants, there's simplicity now activated on Liquid. Go and build a commercial project on Liquid that is in demand and people want it. This cycle doesn't seem to have played out. We're behind schedule. We should have had a bull run already, like a massive run up. And, we're down actually at the time of this recording. So I think this cycle, if you want to call it a cycle, is delayed. It might push into next year for whatever various reasons there are. But I think the nation state adoption is coming. We're pushing on a lot of fronts. Other companies and people are pushing too. There are concrete examples of what Bitcoin can do to benefit a country out there right now. The moves in the US, I think, have yet to propagate throughout the world. So Trump did create the SBR, but they haven't started buying yet. And we are talking with other countries to do the same. There are a few that have said they will create it. And I think it's all coming. It's really that these things happen very quickly. It's like literally gradually and then suddenly.
Bitcoin is trading above $114,000 again, but this time it's not retail hype driving the move, it's strategic balance sheet accumulation. MicroStrategy just added 196 BTC for $22.1 million, bringing its total holdings to 640.31 BTC, worth over $47 billion. Funded through its at-the-market equity program, this purchase signals a long-term approach, treating Bitcoin not as a trade but as a monetary reserve asset. Yet despite heavy buying, the price remains surprisingly muted. This disconnect is exactly what Samson Mow has been warning about. When major corporations keep stacking but the market barely reacts, something unusual is happening, potentially synthetic supply, paper Bitcoin, shady exchange activity, or ETF distortions. On-chain activity looks healthy, but the price signal is obscured. meaning the real impact of these purchases could stay hidden until the friction resolved. Meanwhile, digital asset funds reported over $800 million in outflows, with $719 million from Bitcoin products, yet the lack of significant short selling suggests this is rotation, not bearish conviction. The Crypto Fear and Greed Index has climbed from 37 to 49, reflecting a market in transition. All of this points to a deeper shift. Bitcoin's price is increasingly driven by institutional demand, political adoption, and systemic positioning, not short-term sentiment. The run-up may be slower than expected, but when it accelerates, the underlying momentum will be unmistakable. So, how soon could Mow's Omega thesis play out, gradually or suddenly? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.